Hello, everyone. This is Emmanuel Eisen coming to you again today with another edition of Financial Breakthrough Academy. It is my pleasure to be with you and to share a few thoughts and ideas in the area of financial education. Our passion, as we know, is to help our community, help you out there in your profession, in your career, and your family, looking for some thoughts and ideas in building that financial breakthrough for your family, for yourself, for your business, for any aspect and level of your life that you may be in. We try to be able to share this to encourage you and to help you to get some ideas and thoughts that you can chew on for whatever aspect of your finances that you may be dealing with. So, in the light of that, we will be going ahead to share some very interesting content today that I believe will be helpful for all of us wherever we are. Before we go any further, I'll go ahead and share on the screen as you see it our disclosures. Again, the main goal of this is to be able to help you understand this is mostly for information purposes. So I'll read it out. Information presented here does not constitute the rendering of personalized investment advice, but is limited to dissemination of general information and education on various financial topics. A professional advisor should be consulted before implementing any of the ideas discussed. Again, the whole purpose of the disclosure is to be able to let you know that this channel is designed to help you get some information education to you, and anywhere you desire to implement this thoughts and ideas, to be very essential that you sit with a professional to be able to, it could be a CPA, CFP, the tax attorney, somebody that can help you implement the concept and ideas that we will share here. So that's just for our information. With that said, today we want to talk about 5 ways to maximize the impact of your tax refund. Okay, it may be that you are in a position where you had opportunity to get a tax refund by the time you file the taxes. I believe this week is the week that there's opening time for people to go ahead and start filing. And I think we shared last week that the IRS encourages us to file electronically to help minimize errors, and potentially if you're in a place of getting a refund, it may be a good idea to request it through direct deposit so you can get it as quickly as within like 21 days or so. That's the estimated time. They just release information later today. I believe that there's some potential delays, as we've mentioned in the past, that may be taking place because of all the pressures that they have had over the couple of years with the pandemic and some other budget cuts and other things going on. So anyway, our topic here today is on 5 ways to maximize the impact of your tax refund if you're in that position where you're able to get a refund at the end of the tax filing for yourself. Let's share one scripture. As you know, on this platform, we have the habit of being able to glean in some wisdom on some ancient writing. The scriptures is our foundational concept to help us gain some insight in some financial topics. This scripture is from Galatians 6:7. It says, "Do not be deceived, God is not mocked, for whatever a man sows, that he will also reap." My take for that is that, if we want to reap a certain outcome for our lives in terms of what we are believing for our finances, then we have to sow that. We have to be willing to put in the seed or the effort that will enable us to get back that result that we need. So that's our scripture. We also have a quote attributed to Albert Einstein saying that the hardest thing in the world to understand is the income tax. If you prepare the income tax before, or you've consulted your CPA or enrolled agent or somebody that does your taxes, it could be, sometimes it can be very intimidating, a lot of complex numbers and fields and all that. So anyway, this quote is attributed to Albert Einstein, saying that the hardest thing in the world to understand is the income tax. Okay, with that said, uh, as we go through this presentation and information, you may have a question, or you may be wondering, how can I implement this concept, or how can I be able to apply this in my own situation? Uh, we are honored to offer you a complimentary discovery call, and just text your name to 720-575-1505, and one of our team members will reach out to you and see how best we will be able to uh, help you in that specific topic, if this or some other concept or areas of your financial plan that you would like to discuss. We'll be happy to share that and help you with that at no cost in our complimentary discovery session with you. So there are 5 areas I want to kind of look into when we come to talk about maximizing impact for your tax refund. At least, I mean, there are different ways we can look at this, but I just took 5 of them that we can just go through fairly quickly to at least give us some thoughts. Maybe you've thought about them, you perhaps maybe, well, I could do this or do that. The 5 areas I'm looking at is start or expand an emergency fund, pay down debt, start or fund the Roth IRA, fund a college savings education account, and invest in self-development. So these are the 5 areas that I identified for this topic. So let's go ahead and look at it one at a time. Start or expand an emergency fund. Now, I went out to figure out, I mean, it's pretty intuitive, but by definition, what's an emergency fund in actual fact? Okay, the definition is that an emergency fund is designed to provide financial backup for unexpected expenses, or for a period of when you aren't working and need income. Things happen. We all know that life is not a straight line, and therefore we may be in a situation where our financial need may be at risk because of illness, or maybe you lost a job, or something came up. Sometimes for some of us that coming from, or different parts of the world, and first generation immigrants here and all that, you may have family back home, and suddenly there's an emergency that you have to take care of, or just here you may have your car break down and you realize, well, you have to come out with $1,000 or $2,000 or whatever dollars to get it back on the road. How do you address that? That is when an emergency fund can be very, very helpful, if we have been able to work on that during some period of time. So one element that I feel we can use when it comes to our tax refund is to be able to put some of our money into an emergency fund. Yeah, I know it's very tempting that we get that refund coming in and all these ideas come to our head, but if we are trying to really build a strong future financially, it's important that we look at certain foundations, and one of them is just emergency fund. And by the way, whilst we are still on it, the point with getting a refund, and I was kind of browsing around, I got some ideas, and I've heard it before. The point is that anytime we have a refund from the IRS after a filing season, it literally indirectly means that you've learned the government, you loan money to the government in the course of the year, interest free, literally. Is that right? Because you are deducted your income taxes as you get your paycheck, or if you're working for yourself, file your taxes quarterly, you get a deduction, or you're making the payment. So at the end of the year, if it happens that you paid more than what you would do in terms of when you take into account other credits and things like that, you are giving back money. So that in essence translates to giving the government some money at no interest rate at all. Is that right? So it's important that if we have this refund coming to us, we find a way to make the maximum use of it. And that's one way I think will be helpful if you have not yet started an emergency fund, or you have but not been very consistent. This is a very good opportunity actually to be able to fund your emergency fund for yourself, your family. Now, in practical terms, it's recommended that we keep about 3 to 6 months worth of living expenses. So in other words, your fixed and your variable expenses, maintaining your house, rent and other, food and gas and all the things that we need to kind of run our family and our home on an ongoing basis. So technically speaking, that is the general, recommendation. Of course, there could be some variations, but at a high level, this is what is recommended in the financial services field. So if you get 3 to 6 months worth of living expenses, therefore, if this year you happen to be in a position where you are going to receive a refund, I think it's a great opportunity to actually take portion of it, or at least some of it, and fund or start an emergency fund. Okay, so let's assume that your monthly living expenses is about, say, $3,000. Just an example. Is that right? So based on that, 3 to 6 months formula of our living expenses, then under normal circumstances, a household that is living off up to, say, 3,000 living expenses should have between $9,000 and $18,000 of funds within an emergency fund. Now, the point is that we don't have to have all of that at one time. That's why it's an ongoing process to put away a certain amount. So having the tax refund coming in as a one-time opportunity, maybe you didn't really expect it, or you don't really have your mind on it, it would be good to use some of it towards that emergency fund, or start it if you have not yet started it. I think that's something that would be very helpful for most of us to think about, consider doing. Now, another thing is that the money should be must be as liquid as possible. Cash and cash equivalent, check, savings account, money market, whereby you can easily have access to the funds, is typically the place to pack that amount of for your emergency fund. Any form of account that you can easily have access to will be the best way to do that. Now, it's also said that when if someone is single, for singles and single income household whereby only one person is working, it's usually important to consider more or be more aggressive with this emergency fund, because if you're single, you're the only person making the money for yourself. So if you happen not to be able to go to work, then what next? So unlike somebody who may have a spouse, married, if one is not working, then the other may be working. Now, in the same way, if only one person household is the one generating the income, then it's also a good idea to consider, be more aggressive with the emergency fund, because if only one person is the one who is bringing in the income, then and that's something that happens a lot. So we want to take that into consideration. So again, our first thing is, let's find a way, have some of the refund money coming to us to go into an emergency fund. And if you can separate it from your regular checking and have it somewhere else, if you can open it at a different bank, or whatever you can do to make it less accessible, the better it will be in this situation. So that's the first, I would say, way to be able to maximize the tax refund that may come to you, by opening or starting or funding an emergency fund for yourself and your family. Now, the next point is to pay down debt. I know sometimes you're getting the money and you have all these plans or ideas about what you want to do with the money. So thinking about paying debt with the money may be a little bit, it's like you don't feel like you are really enjoying the funds coming in. Like, trust me, it can really make a difference. So Here's why. Because especially when we talk about high interest debt, you know, whereby the interest rate on the kind of debt you have, let's say if it's credit card balances or car note or something that have very high interest rate, maybe you got it at a time where perhaps credit was not as strong, and therefore to be able to get that credit card for convenience sake, you have it, but at 15% or 20% or something as the interest rate, and you are carrying a huge balance. Those interest that is being charged, it can add up very, very quickly over time. So if at all possible, this will be another great opportunity to use some of your tax refund money to pay down high interest debt like credit card bills and car notes that are gradually eating away your wealth and eating away your peace. Okay. And again, like I said, if you were to go out and buy a TV or buy something for yourself, or maybe try to start a project or send it back project home or something, it may look much more satisfying to your soul. But I can also say that if you're able to pay some, or at least a big chunk of a high interest there, you're going to help. It helps you to save money in the long term, because by not paying more interest on the debt, you are actually paying yourself money. Is that right? And I would also say that you can, by so doing, reallocate your monthly payment of that type of debt. If you're able to pay it off with the refund money, then guess what? Going forward, if you don't change the habit, but you use the same amount that you were allocating towards the credit card, towards another savings account or investment account, you will build wealth going forward. So I think it's a nice way and a very important way to make a maximum use of your refund, by using the money coming in to pay down debt, to pay down credit card debt. Okay. Now, our next point here about how to maximize the tax refund is to start or fund a Roth IRA. Okay, to start or fund a Roth IRA. So I know most of us may be aware of that, but to be much more simple as we can, let's look at the definition of what a Roth IRA is. So a Roth IRA is a special individual retirement account where you pay taxes on money going into your account, and then all future withdrawals are tax free. That's just simple definition. Okay, so the government has this rule in the code, or the IRS code, that allows us to pay income tax on the money we receive today, okay, and then put the money into this account that grows over a period of time. And when we go by certain rules, okay, there are a few rules you have to abide by, like it has to be in there for 5 years and you have to be 59 and a half. Just a few rules you have to also be cognizant of. If you get within those guidelines, then when you take out the money in future, it will all become tax free. Okay, so again, the idea is pay your income tax on the money now, put the money into it, and then kind of go by the rules of the Roth IRA, particularly getting 5 years in, 59 and a half, and having a specific, other triggering event that you want to make sure it's within those guidelines to make sure it's tax free. So if you do that, then most likely you're going to have the opportunity to withdraw the money tax free. So I think if you have tax refund that potentially maybe you don't have any debt situation, and perhaps you feel like, yeah, I could make use of this money in this direction, I think opening a Roth IRA, or at least if you have one already, funding it will be one awesome way to look at it. Is that right? So currently, Roth IRA, usually every year there is an adjustment that is made by the IRS to to tell us how much we can put in. And I think for 2022 is $6,000 that can be put in. Okay, if you are 50 years or old or above, you can put an extra $1,000. We call it catch-up contribution. Okay, that you can put in. There are a few limitations. In other words, not everybody is qualified or allowed to put money into Roth IRA, technically speaking. But for the most part, I'm thinking many of us watching this may not be in that category. But in case you are, if you have a single with income up to 144,000, then you're good. But anything above it, you may not be able to put money into it this year. If it's a couple making up to 214,000, is also the limitation there. Anything above it may also be out of the opportunity. Now, there are other strategies that can be used to be able to still make contributions. Something called backdoor conversions and things like that you can do it to take advantage of the tax efficiency of your investments. But our point here particularly is the fact that if you are in a position to be able to get a tax refund, is that right? Potentially starting or funding an existing Roth IRA will be perhaps a good option to look into, a good way to build that investment account or take care of that specific need we are addressing here. Is that right? So anyway, that was the second thing that we wanted to the third thing we want to address in terms of what we can actually do with our money coming in from the tax refund. All right. Okay, now with that, the next thing is to fund a college savings education account. Now, if you have a kid, that's great. If you're a grandparent, that's also an awesome opportunity for that. But basically, we're not going to go into too much details with that, but there are a few options there that you could potentially put money into when it comes to trying to make maximum use of your tax refund. 529 plan is one option. Again, we can provide education specifically on that at some point, or just send in the request and we can meet up and explain how this works. But basically, putting the opportunity into put money into the savings account for kids K-12 and post-secondary school is what a 529 plan is. That you can be able to do that with a limit of about 16,000 in the current year 2022. Another educational savings account there is Coverdell Educational Savings Account, which is run mostly at the state level. Okay, so it's coming at $2,000, I believe, at the current presentation here. And to some extent, where it's suitable for your situation, a cash value life insurance account contract can also be a very effective way to maximize your tax refund by funding, we call something max funding, a permanent life insurance account, where you are really using the life insurance contract as a vehicle, as a tool to ramp up, to build up your savings and your investment and your ability to save up money for the long-term use. Now, this works when you have a long-term goal that, for example, every year you're going to put some money in and let it build and grow like that year by year, for yourself, as you grow and as your children grow. By the time you're 18 or whatever, you may have something in there that could be used potentially if you structure it well, if it's well structured. Again, you need to work with a professional who can help you navigate that type of thing. But anyway, savings through the college savings account, 529 account, Coverdell, and maybe some other options there like cash value life insurance could be a great way to actually be able to save up, use some of the money that's coming from your tax refund for that. Okay. Now, with that, let's look at one more thing. I put here as another option: invest in self development. Now, I know this may sound a little bit out of you know your typical financial use of your money coming from your tax refund, but I can assure you that an investment in yourself is frankly one of the most effective ways that you could put to use when it comes to your tax refund. The return for it may not be spontaneous or may not be immediate for you, but it could be very, very, very beneficial for you in the long run. So invest in yourself is what I put there as one important element when it comes to being able to use maximum use of your personal tax refund money. Now, there are ways I've put in there that you can make it really practical. For example, you could just take a course at a community college for something that you are interested in. It could be, I don't know, cooking class or some public speaking class or writing class or, some class that talks about using, some technological tools, maybe in the marketing, whatever is, of importance to you. You could invest some money in taking a course at a community college. I talk about professional development. Maybe your workplace has the opportunities for you to, develop yourself and position yourself well for potential promotion at your work, or if you're a business person, maybe improve your skills. Now that leads us into investing in small business ideas. You may have a business idea you've been wondering, I want to do this. I don't know how to go about it. I don't have money. Well, if you have the opportunity to get a refund, maybe there's a time to start investing in that small business idea, or at least start putting the money away to build up the capital that you need when the idea implementation comes in for that. Okay, so investing in small business ideas, one way for self-development that you can do. The last one I put there is invest relevant program in your area of passions. Again, tying it back to education and self-development. If you are passionate about something, you like something, maybe if finances has been the, I would say, the hindrances, then this is a perfect opportunity to do that. Investing in your finance with the tax refund. So anyway, these are the areas that I thought could be very valuable for us in that respect. Now again, you may have questions. How do I go about this? Have more questions on this subject. Again, you just text your name to 720-575-1505, and we'll be happy to kind of help you navigate that. So, we've talked primarily about just a few things. The idea being, how do you go ahead and make maximum use of your personal refund that is available for you this year. If you had the opportunity to get a refund, what do you do with the money? And we decided we could probably start or expand an emergency fund for yourself and family, knowing that the emergency fund should constitute about 3 to 6 months of your living expenses. Is that right? You could use some of the money to pay down debt, most importantly, or most critically, the high interest debt, credit card debt, and maybe car notes and all that. Perhaps you could start fund the Roth IRA as an option. Maybe you want to fund a college savings account for your kids or grandkids, and maybe consider investing in your self-development, that you may be able to position yourself for better income based on your development for your business or your career. So these are some ideas that I thought could help us as you go through the tax season and going through the filing season. I trust that you got some tips in here that you could go ahead and make use of for yourself, for your business, for your family, and do better and help you break through financially in every area of your life. With that, I would like to sign off here. This has been Emmanuel Lyson, your financial educator, coming to you with this edition of Financial Breakthrough Academy. We'll be back very soon. Be blessed.